Good morning, everybody. Welcome to Smack the Markets midweek market update and live stream. So as usual, we've got the usual risk disclaimers to go through. Just please make sure that you take a quick read through these and make sure that you're comfortable with them. In brief, what we're saying here with these is that we're not licensed to be able to give advice. Any markets that we look at, any trading opportunities are purely our opinions and not intended for any advice at all. So please make sure that you're comfortable with these terms before continuing on the session. So quite an interesting sort of markets at the moment. We had quite a quiet time coming into the week. Things seem to be straightening out a little bit more now, particularly sort of yesterday afternoon and today. So today again we've got a very light day on the fundamental schedule. Not a great deal of events there. Not until 3 o'clock, and that's when we start to get a few 3-star announcements. Of course, the big things going on today is Canadian interest rates, the EU and UK Brexit trade negotiations still ongoing, with the meeting between the head of EU and UK today. Also US stimulus, still that's on the sort of cusp and still sitting there behind the scenes. I think there's a sort of fair amount of anticipation now that that may well sort of be ratified soon, and that's certainly sort of being felt through some of the equity markets. So this morning we've, from a strengths and weakness perspective, we've again a few things sort of slightly changed since this morning, but we're seeing sort of common strength in Great British Pound. I think on the Brexit trade deal optimism. We've got strength back into the Aussie and the Kiwis, and they're long-term strong currencies at this moment in time. And on the weak side, we've got the US dollar, the yen, and the Swissy. So let's have a look at how things sort of fared from the markets that we discussed on Monday. Morning, everybody. Morning, Michael, Patricia, Martin. Superb. Morning, Gordon and Miles. Great. So, yeah, so if we have a look at the Dow first of all, and we take a look here on the cash market. Now, on Monday, we said that the support or the level here at 30,000. Now, the level here on the cash market is slightly different to the futures market, which we use in the trading room. Now, the futures market, this level is dead on 30,000, but here on the cash market, it's more like around sort of 30 and 75, that sort of area. So you got that up here where we've had these previous highs run out of steam. Now, that area here, as I said, on Monday, we come down to the 4-hour time frame, see a little bit more detail here. We're looking at the market finding support here. We said if the market sort of finds above this level, we can really be looking at new highs. If the market sort of breaks underneath here significantly, then we could be looking back down to that 29,600 level. In fact, what we've seen is a bit of both, actually. The market did sort of slip underneath the 30,000 level. It sort of found a bit of support until the sort of cash market opened, and then we had the sort of rally which sort of pushed the market through here. So index markets pushing on to new highs. Now, of course, at the moment here, the path of least resistance is to the long side, and there's no potential resistance in the way. So look for higher prices on these markets, and look for buying the dips and those usual sort of trading opportunities. So we're still liking these to the long side. Now, I was coming down to the sort of lower time frames, start to see if we can see any opportunities intraday on these. The sort of price action and the moves are not sort of particularly easy to look for structure. We're just starting to get a bit of structure coming in on the sort of 15-minute time frame. So again, I think the best time frames for these are our low time frames and intraday trading still on these sort of markets. Now, we also looked at gold. So let's just review what happened with gold, because a couple of levels that we were looking at on gold, and in fact we were looking at 1850, which just ties the market into these old lows here. I sort of get that a little bit more in there, and you can see that the price action's actually sort of pushed above that level at the moment. Now, I could sort of mark in the fibs, but we know where they are. The 61.8% fib level coincides with this level exactly from the recent leg of the move. So there's a bundle of things going on here, and now prices pushed right the way through that sort of level. Now, there is a bit of another level just higher up here. So again, I was looking at this. You can probably sort of recognize about 1870, 1873. I've got it on my chart, but just around these lows here. Now, let me just sort of zoom out of that. It always looks slightly different on different platforms, but you can see that we've got also previous, let's come down to the 4-hour time frame, previous support and resistance in here too. Let me just put this. So 1873, 1848. So that's exactly what I've got there on my 4-hour time frame. And we can see that the market is sort of finding a bit of resistance at this level here. But then again, we found resistance once the market came up to the 1850 level as well. So on these at the moment, the market is still looking strong. We're coming back into moving averages. Indicators looking okay. And one thing that I look at here is, we're at sort of decision points. The market could possibly continue a trend and roll over at these points, or we could continue to move higher. At the moment, the precious metal markets are looking much more stronger, and I think they're sort of taking the lead from the dollar, and that's that sort of weakness in the dollar is certainly helping the precious metal markets to regain some strength here. Now, one thing that we can do with this is to look at the silver market as well and start to see how silver compares, because these two are likely to continue in the same direction. And again, if we just zoom out of this slightly, and we can start to look at a little bit of structure in here. So I've got, let me get my levels tightened up here. So just above that sort of 24 price point, you can see through here we've got previous support and resistance, and if we also look at the top end of the highs here, you can see that again we've got previous support and resistance through here too. Now zoom into that and you can see where the market is at the moment. So it's just pulled into previous support and resistance, and we're back into the moving averages here too. So silver at the moment looking much more bullish than gold, and although sort of gold could be on that sort of decision point either way, and that this to me looks more bullish. And I think particularly if the market can find support here, if the silver market can find support here and we start to see a push higher again in the context of this trend, then we could start to see some higher prices across the board for precious metals again, and that could be the end of the dip that we've seen here in precious metals for a while. So again, keeping an eye on this area here for the for silver, and of course, you know, we've got a kind of a setup there at the moment. But again, even if you start to come down to the lower time frames, I'll come right the way down to the 15, you can see that we're starting to get a bit of a turnaround, potential turnaround, and say start of it at the moment, where we've got two lows with divergence, and now we've got a new high. So again, starting to see a bit of evidence of a possible turnaround here on trend. Satar, question: do I find the Dow easily tradable market? I find it much easier to trade than the other index markets. So it's my preferred out of them, and that's compared to the S&Ps and the Nasdaq. So my sort of common theory is on the S&Ps, don't put your stop where people think you put your stop. So in other words, don't put your stop where everyone else is going to expect it to be, because the S&P is much more of a professional market, and traders are going to know where they are. They're much thinner markets. They're not currency markets. So you've got to remember that. For that reason, I always put my stops in slightly different places, give them a little bit wider if I'm trading the S&Ps. Nasdaq can be quite volatile on the sort of time frames that I like to trade them on. The Dow, traditionally, the Dow is more of a sort of an amateur trader market, and that's the sort of group of people I'd rather be trading with. So I always sort of find it much more predictable, and for that reason, it's also my sort of choice out of the three. And we had some nice moves on it yesterday, didn't we? So there's a bit of a breakout on that yesterday, which was quite nice. I didn't trade it into the evening, but just managed to sort of capture that little breakout trade, and that was the only one I had yesterday. Okay, so if you've got markets as usual that you want to take a look at, then pop them through into the questions box earlier rather than later, so that we can take a look at those too. What I want to do is to go and have a look at euro dollar, because we've just taken a look at euro dollar here on the lower time frames, but this is a trade, or this is a market, I should say, that we were looking at on the higher time frames as a pullback into 120 on Monday, and it still could be that is on the cards. So let's just have a look at 120, roughly around here. So quite a technical level here on euro dollar. It's a big number. It's significant for many reasons. It is also a historical level that goes back a long time too, and the market's sort of been quite sort of stretched out recently. So some sort of retracement back into this area could bring it back into sort of fair value to look for, you know, new positioning for a new continued move higher. Now, again, let me just zoom into this and we come down here. So what we were looking for was a retracement back into 120 at the beginning of the week. We had dollar strength at the beginning of the week as well, and that's really what sort of helped to push the trend down here on the 4-hour time frame and break the long trend that we had here, which actually was quite nice. As you can see here, good geometry on the market, and now price has sort of returned back into sort of choppy price action. So what have we got here? We've got double tops with exhaustion candles. We've got convergence to the short side. So we've got all the ingredients here, the indicators kind of pointing to weakness to the short side. And but the market isn't going, and we're just sort of finding that sort of sideways sort of consolidation appearing. Now, there could be a couple of things going on here. There's a number of fundamental things with the EU stimulus package, which is constantly being sort of discussed at the moment. So there's certainly anticipation for that. There's also sort of anticipation for a EU-UK trade deal, and you know, that's sort of impacting on both currencies as well at the moment too. So again, it could be sort of an either way play here, but we were looking at the market and it's looked like it hasn't set up yet. And on the these lower time frames, we were looking at to see if we would get a rollover and maybe a sort of a continuation higher, because we've got a setup started to form on the lower time frames on this, in line with the general dollar weakness. So that was what we were looking at. It's not looking, it actually looks like it's invalidated at the moment. Maybe Fergal can maybe sort of give me a bit of an update on that. But it's not looking like it's either validated or possibly invalidated at the moment by the looks of things. So we could still be in the bit of a play here for maybe a pullback to 120. So that's the sort of big technical level that I see here on the market, and that's of course while the market is underneath 121.50, which is the next level that I've got up here. Okay, so that's invalidated now as well. So Satar, yes, we'll look at. So just let me just check the questions. So yes, we'll look at cable, because actually cable, I've got that on my list as well. So let's take a look at Great British Pound markets. So again, I mean, one trade that we could consider at the moment is a Brexit trade deal trade, and we could look at things like strength in Great British Pound. We're certainly sort of seeing that at the moment. There's a bit of an optimism with it. With all of these markets and all of these sort of trying to trade a news event in anticipation for a news event, there's always higher risk, of course. And we had this when we tried to take some positions on sterling markets earlier last week, and the market just sort of completely turned and invalidated any setups that we were looking at. In fact, I think we were looking at going long on these markets on pound yen, and we scared the market away. So now we're getting a recovery here. Now, if we're thinking about strengths and weaknesses, then cable, pound dollar would be strengths and weakness market, as long as we've got strength in Great British Pound. So if we have a look at the higher time frames, these are looking sort of well intact. So daily time frames, even sort of weekly time frames, you know, these markets are sort of well intact for the longer term. That doesn't mean to say that the market's going to continue going higher, of course. Negative news on any trade deal is likely to have a short-term impact on Great British Pound, as we've seen with these pullbacks already. So come down to the lower time frames, I think the sort of thing that we could be looking at, even if we come down to the 15, which is one of our sort of lower sort of entry chart timeframes, we can see that we've got sort of structure points around here, around the sort of 134 area. And if I sort of mark that in, so you got around that sort of 134. Just sort of coming into these sort of areas here. So some sort of pullback into sort of value areas, into sort of retracement areas are the sort of things that I would look at for potential sort of positioning. So certainly wouldn't look at any sort of positions where price is at the moment, but maybe we get a breather and a pullback. That could be something that we could look at for a tentative trade on a cable market. Another one that I like at the moment, though, is the pound Swissy. So again, if we have a look at this, I suppose these are my sort of two preferred ones out of the suite of Great British Pound markets. So pound Swiss, this market is not in a, it's bigger picture. This is in sort of sideways sort of consolidation. But if we start to try and make a bit of sense of this, again, let me try and zoom out of this. And bear in mind that what we're looking for here is pound strength. So if we're looking at Great British Pound strength, and at the moment, the Swissy is weak, so this would be a strengths and weakness in alignment at this moment in time, even though we don't have the price structure currently. But what we have seen is that price action has pulled back into some significant sort of structure points. It's found support at those, and it's also broken the next structure level. So we've got a decision point here where the market is now breaking that. So now we've got a low, we've got a lower high, we've got a higher low, and now we're just getting up to about a higher high on the 4-hour time frame. So just the sort of early stages here of a potential sort of turnaround. But again, I'm sure you can see if we just look at that structure there, and even if I sort of try to come out of this a little bit more, you can see the sort of range that the market has been stuck in there. And now that we're sort of coming out the top end of this, so we've got a lot of congestion here, a lot of support. Market's found support there. Now we're starting to get into a higher trading window to the long side. And the again, come down the time frames, we can see that this market has turned around. We've now got quite a bit of strength in here from price action. If we come down to the 15-minute chart, again, we can see that sort of starting to develop here. So no setup at the moment, but what we'd be looking at is some sort of pullback. We've got the alignment here that could start to get some trends forming on these lower time frames, and pullbacks into levels like we just sort of suggested could be sort of rather interesting places to sort of get positioned. So I think pound Swissy, pound dollar are some of my favorite markets here, for Great British Pound markets for positions. Pound yen is the same. It's moved on a little bit far now. I mean, we could still, I'll show you the area that I'm liking with Great British Pound, and that's that 140. That's the area that we were looking at getting positioned or above last week. And and that didn't work out. So the market rolled off 140. I can't remember where it was, here or something. But the market's up to that sort of price point at the moment. So there's quite a level here around that sort of 140 area, just underneath that 140 area. Quite a nice sort of breakout level. Getting above there does really sort of get this market into a new trading window to the long side. Okay, no problem, Martin. I'll catch you later. Okay, so again, I think pound yen could be good, but above that 140 price point. Some of the others, in fact, because there was quite a bit going on this morning, wasn't there? I've got such a lot of scribbles on my watch list. I'm almost wondering if I've got to do another one to tidy it up before the end of the day. Right. So the dollar Swiss, I think, is also another one that we could keep an eye on for on the short side. This market, again, bigger picture, has broken significant levels. It's now moving down into free space. Let's have a look at this on the weekly chart. As we can see there, we've had this sort of consolidation. Now we're sort of breaking down, and it's coming down to these. You can see this on the 4-hour time frame. We just had this sort of continued grind lower, and probably the easiest time frame to see this on is maybe the 1 hour. You can see that we've got a bit of a level forming through here, and a bit of a sort of consolidation forming, but indicators still looking weak. The trend looking sort of fairly reasonable, and again, some sort of setup here is certainly something worthwhile keeping an eye on. And you can see that through here. We've got these lows, we've got these lows. It's coinciding with price action at this moment in time. And again, I mean, this would be a weak against weak market at this moment in time. But again, we're looking at a trend continuation too. So what else have we got? Let's talk about oil. There's oil here. Again, since we've had the breakout, as you can see here on the, let me just zoom into that. Breakout here. It's now sort of looking sort of quite strong. Again, we're into some sort of free space, and we've got a sort of a trading window. You just zoom back out of this, you can sort of see where price is. So we've got this sort of trading window now in between. Perhaps if I just make that level yellow, you can see that a bit more clearly now. So there's not a lot in the way up for a bit of a move up to around 50.5, $50, sort of 60 odd cents. So there's still quite a trading window to the long side. So again, still liking oil to long on this. We've got oil inventories later on today at 3:30. So we need to be aware of that news. But generally, this is looking supportive long. So again, let's come down to the lower time frames. So structure looking neat here on the daily. And even if we come down to the 4-hour time frame, we've got a bit of a range sort of forming in here. And this is where it sort of starts to get a little bit sort of tricky for sort of positioning. I think possibly on the lower time frames, if we start to get a bit of a move on this, then lower time frames would look a bit more easier to get sort of positioned. But maybe look for a bit of a breakout above the top here, and I think sort of just look for maybe these higher levels here, these higher highs, to get tested and taken out before starting to sort of look for positions, because there's not enough in their way, not enough distance there to get clear on the risk before we get up to those highs. But longer term, I'm liking that to the long side. So Fergal mentioned Kiwi Yen. Actually, that's another really good one, because we've got strengths and weaknesses supporting Kiwi Yen at the moment. So if we take a look at Kiwi Yen, and it's a bit like Aussie Yen as well. So Tar, you mentioned any fundamental reason for the Kiwi and the Aussie to be a strong currency. So yeah, I mean, there's a number of things sort of going on. I mean, these are longer term. We've had sort of longer term strength in these since the sort of coronavirus crash, and I call it the coronavirus crash, but you know what I mean. The Aussie and the Kiwi have been sort of strong from there. The one driving factor that is also supporting these higher is the US dollar weakness, and as we know, the US dollar has sort of broken through some very significant levels, and the talk is at the moment of another stimulus package, printing more money, and that is not conducive of a strong dollar. That dilutes the dollar, and so that's certainly sort of all helping to weaken the currency. And I'm not really too sure that the US are too worried about that. The US administration have been looking to try and weaken the US dollar for a long time to make it more competitive. So, you know, it's not a negative thing, and that's certainly helping the Kiwi and the Aussie to strengthen. And at the moment, this week, earlier in the week, we had a very weak Aussie and Kiwi and indecisive, and this really wasn't sort of conducive to the continuation of the trend. Today we've seen that sort of weakness, the strength coming back in, and we can start to see these sort of moving now. So if we have a look at Kiwi Yen, you can see here from the daily, we've had that sort of play out. In fact, Kiwi dollar and Kiwi Yen have been swing markets that we've been looking at for a while, and we actually had a swing setup there from last night's Fergal's swing post last night. So it's sort of playing out nicely. We come down to the lower time frames and start to come down to the 15-minute time frame. We've got in fact, we've got a sort of setup just sort of forming here at the moment, possibly just a tad late on that. So we've got strengths and weaknesses behind this at this moment in time. We could look for maybe a bit of a deeper pullback on this on some of the more slightly higher time frames. We have a look at the hourly, for example. This has been a one-way move so far this morning. So actually not looking at an unreasonable setup there at this moment in time. Okay. So let's just take a quick look at the Aussie. See how the Aussie, so actually Aussie, We had a smaller retracement there, but again, similar sort of setup, similar direction. So again, good ones. I think these are good markets here for the just a bit of patience to wait for the pullbacks on those. So actually, I got my, just check my notes. It was actually the Kiwi dollar, wasn't it, from the swing last night. There we are. Yes, agree, Gordon. It's isn't it crazy how we're looking at interest rate differentials of less than 1% at the moment? But yeah, you've got a 0.25% rate in the Australian dollar, which is actually sort of fairly reasonable compared to what we have in many other places around the globe. So Fergal, was the swing play that you mentioned, it was on the Kiwi dollar last night, I believe, not Kiwi Yen. Maybe just confirm that. So what else have we got? What else have we got this morning? I've got, what else have we got on our watch list? So we've gone through the Aussie yen, the Kiwi yen, Kiwi CAD. Again, I think that's also looking sort of fairly interesting. So we've got the Kiwi CAD. It's looking like a bit of a turnaround here. Let me just bring that up. So you had both on the list for last night. Okay, so Kiwi Yen and Kiwi dollar. Well, both are looking very good, and both I think we should look at those again today for intraday moves as well as swing moves. So Kiwi CAD, and you can tell that I haven't got them, which is, otherwise I'd know exactly which ones they were, which is a bit of a shame. Looking like rather nice moves on those swing plays. So Kiwi CAD, again, this looking strong this morning too, and break out above that level. So we're just sort of breaking out of that resistance. And with the strength in the Kiwi as well, that's certainly sort of helping this market to move. So again, if we come down to 15-minute time frames, we can see the trend is looking sort of fairly reasonable here since the market's sort of broken out. So we've got higher highs and higher lows, and the moving averages geometry not looking too bad here on the 15-minute chart at the moment. So we'll see how that sort of develops. The other one that was looking very good, and that we got some very good trends in, is that Swiss yen. So Swiss yen has also been a very strong market. And I think one of those markets that often gets sort of missed and sort of almost forgotten about. But we've got a very good trend across all these time frames. You can see here on the 1 hour time frame, quite a nice reasonable trend structure here with convergence as well. So we've still got strength in that market. At the moment, though, this one is weak against weak. So you need to be just a little bit sort of careful here, looking for a sort of a good tight setup on this. But I'm sure we'll see a sort of continuation of this. Okay, so we need to start to so Swiss yen, superb. Gordon, yep, we just taken a look at that. Let's have a look at Euro AUD, and so Euro AUD, Fergal mentioned this morning as for a move short, and I think he must have placed orders on that. Look, it's completely broken, and moving nicely. So again, that strength in the Aussie certainly sort of helping to push this down. I think the level I've got on here is at 162. There we go. So if I mark in 162, you can see previous support and resistance. We've still got fair distance to go on this. So again, really with these, you know, we need to see maybe some sort of pullback on this, and there might be some, again, new opportunities to get positioned. But I agree with you, Miles. Looking very nice. And I didn't manage to get into any of this morning either, because I was sort of preparing for this. But there looks like a nice possible sort of breakout of this range. And that moved to the short side. So well spotted. Okay. So I had on my list this morning Euro Kiwi. I don't think that looks as good as Euro Aussie, but Euro Kiwi is pulling back. I'll just show you what I was. So very similar, of course. You can see here that we're just sort of breaking underneath on the weekly trend. We're breaking underneath a level here. That's what I was. Brought me to it here on the daily. You can see again that we're sort of rolling over and breaking through that level. Mid time frame's not looking particularly sort of wonderful. The start of a new trend, but the lower time frames are looking rather similar to the moves that we've got there on the euro against the Aussie as well. So again, a couple of markets there that I think very similar, but we could keep an eye on for perhaps some retracements into value zones and positioning zones. Okay, so superb. We've let's start to wrap this up now, and we'll take a bit more of a thorough scan and keep an eye on these in the trading room and see how they develop. Okay, so thank you very much everyone for joining. I certainly hope you find it useful. If you like these sessions, then consider subscribing to the YouTube channel, and that way if you switch on notifications, if I understand, you'll get notified instantly each time we set these events up. And we will be running shortly, we'll be running some additional events that are not necessarily just on the Wednesday morning, so you'll get notified of those as well. If you also want to get emailed with the events that we do, then come along to the Smack the Markets website and join the newsletter, and then we'll email you the events that we're running again. Okay, so I certainly hope it helps, and look forward to speaking to you next time. Bye for now.